Can you explain the reversal candle and the confirmation candle? I joined CTB class. I seem to be late on my recognizing when to buy in. Well, that's a whole nother game. You with me here? Yeah? Okay. Do you see what this is? So let's say you're coming up on 10 o'clock and you see this. What are you waiting for? You're waiting for some kind of price action reversal, right? So you have a time of day, right? And coming up, time of day zone. You know it's most likely going to reverse, but you're like, I got to get my, the signal. So a reversal candle typically looks like this. The best ones look like this. Why? Because when price is coming down overall, you see them open here and close here. That's what these candles are doing. They open up here and they close here. That's why they're solid. When you see a candle like this, it means it opens here and closes here. If it comes down to the lollipop, that means it opened, came down, and finished here. Do you see how that is different than opening here and closing here? Can you see the reversal of price? You see that? Good. So then that's the reversal candle. Now what I want to see is continuation. So if the next candle starts looking like this, that means price opened here and went here, and now I've got a shift. But that's not the best place to enter. And you don't just enter because you get reversal candle confirmation. When you get reversal confirmation, that's when you look down at your RSI to see, are you above the mid? You look at your cycle indicator to see if it turned green and the trajectory is pointing up, and you wait for your shift dots to all turn blue. 1, 2, 3. If that's all happening, then you look over at your 5-minute chart just to make sure you're not coming up against pre-market low or some wackadoodle support that's going to send it down. If it's not, and this looks like a cool reversal here without any levels in your way, then you just wait for a pullback to get a better entry. So let me show this to you with a real situation. So what? The reason why it's 220 is because there's higher volatility in the markets than there was a month ago. Sometimes it's 170, sometimes it's 180, sometimes it's 2, sometimes it's 220. Let me ask you a question. If you got it for 170 and sold it for 210, how much did you make? Very good. If you've got it for 220 and you sold it for 260, how much did you make? Right, so if the first one looks like this and you get it right here, and then that's your exit, and the other one, the 221, looks like this, and that's your exit, what's the difference? The only difference between these two, this one might have more volatility that day, which means prices might be a little higher. So what? Doesn't matter. And remember, if the price is higher, doesn't that also mean the premium is going to be higher when you look to get the convert? When you go to sell, it's not higher. Well, then you're not selling at the right moment.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comment section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.